Ultratech Cement, however, succumbed to a slight bout of profit booking, ending almost 2% lower, despite operational numbers actually coming in above expectation. The profitability was lower, largely due to lower other income and higher effective tax rate. Nigel, how are you reading the numbers?
Well, on an operational basis, Ultratech Cement did beat street estimates, though the stock ended lower by 1.5%, getting into its numbers, and for this month itself, it was higher by close to around 12%. To run you through the numbers then, on the top line itself, they registered a growth of close to around 4.5%. That's way better than what the street was working with in terms of a growth of around 2 to around 2.5%, predominantly because the entire top line growth was on the back of higher volumes. Volumes came in at around 11.1 million tons. That's the higher end of the spectrum, delivering a growth of around 4.5%. But what that's telling you is realizations were absolutely flat on a year-on-year basis. Margins as well at around 17.5% came in at the upper end of the spectrum. So that as well looked quite good, predominantly because power and fuel costs came in lower by close to around 8%, and the management has clarified that the better use of their fuel mix is what led to power and fuel costs dipping on a year-on-year basis. Employee cost, though, was a bit of a dampener. That came in higher by a good 10%. Profitability, though, missed street estimates by close to around 30 to around 40 crores, came in sub 400 crores, but that's because higher taxation as well as lower other income did spoil the party for Ultratech Cement. On the whole, operationally strong performance, while profitability missed because of lower other income as well as higher taxes.
All right, Nigel, thanks for